Valutrades.
Good evening, good morning, good afternoon, wherever you happen to be, and welcome to the Valutrades webinar on currency pair trading, co-integration, and correlation. Well, what does that mean? Let's find out. I'm Brad Alexander, and if you know me from the Market Blast technicals and fundamentals every week, you'll know that we have a great amount of fun doing them. We like doing our webinars, and we hope that we've been educating you along the way. We've had some really good comments on our YouTube page from you value traders. We're getting more subscribers every week, every month, and longer viewings. And we're getting some good comments from traders trading the Valutrades account, saying that they're actually making some good profits. So we're very, very pleased to hear that. That's very encouraging, and we hope you can learn a lot from this webinar as well. Right, my name is Brad Alexander, as I mentioned. I'm a professional trader, a retail trader as well. My job day to day is to provide content for good people like Valutrades, and I work for brokers, educators, hedge funds. I also do consulting, licensing, and banking for various entities, including funds. And I've been recently asked to take over the trading arm of a hedge fund, which won't take up too much of my time. I'll never stop doing webinars for Valutrades. That's not a problem. But I'm very pleased with the way things are going in the industry right now. And like I said, I hope we can make the journey a lot more interesting for value traders and keep the profits rolling in. Right. Now, the disclaimer, of course, before we get going, please read the disclaimers on the Valutrades website. CFDs and FX are complex instruments, and you're trading with leverage, so you have just as much chance of losing money as you have of making money. 64% of retail investors lose money when trading CFDs with Valutrades, which, and I've been in the industry a long time, that's a very, very good figure. So we're clearly doing something right. Hopefully those traders are watching the Market Blast fundamentals and technicals every week, and they're following some of my advice and making some good profits. Thanks a lot. Keep watching and subscribe. Right, so today, what are we going to be talking about today? Well, we did a webinar not long ago on currency pairs, and I'm going to go through some of that right now. I'm not going to spend a lot of time on it because we've already had that webinar and various videos on that. But what's really important is you need to be thinking in pairs, especially new traders. Very often traders get involved and they just think, well, this price is going to go up, that price is going to go down, oil will do this, gold will do that. It's not quite that simple. The first thing you need to do as a trader is to think in pairs. If you're an intermediate or advanced trader and you already know this, just bear with me. I'm going to be getting to some far more interesting and more advanced topics as we go through this webinar. But anyway, thinking in pairs is a critical way to look at currency trading, and I'll go through that in more detail. Right, I'm going to be looking at how to do MT4 profiles as well. Again, we've done videos on this, but the reason I want to do that is to be able to get you to look at different currency pairs, comparing one to another. So this webinar is about correlation and co-integration. It's really critical that you learn to look at different currency, different instruments side by side, how one reacts to another. This is what co-integration is all about. So I'm going to get into that topic very short period of time. Also be doing a strong week analysis, and this is critical, I think, and it's a really easy task. And I'm going to be going through a live one, an interactive one with you right now. We actually have a video on this, and I'll show you where that is on the YouTube channel. But doing a strong week analysis is a really easy task for any trader, but very few people do it, and it takes a bit of time every day or every week. And I'll show you how to do it with a very simple spreadsheet, and you'll be surprised how valuable it is and how easy it is to lead you to some good opportunities. Right, we talked about trading pair strategy with co-integration. Well, we are looking at currency pairs versus trading pairs of instruments. So they're two different topics. So please don't get confused. Please don't be confused by the word pairs. Currency pairs, you know what that is, whether it's dollar CAD, the Canadian dollar versus the American dollar, whether it's gold versus the American dollar, whether it's the Swiss franc versus the Japanese yen. You know we talk in pairs. but also we can talk in pairs of instruments. And the equity traders do this a lot. They will look at Microsoft versus Apple or American Airlines versus Delta, and they'll try and find little anomalies within these equities and you know, crude oil, WTI crude oil versus UK crude oil, Brent we call it. And a lot of traders will be trying to find the anomalies between those two. And that's what we call, that's where we're looking at co-integration and correlation. And we'll go through that in a few minutes. So I want you to keep in mind that we talk about pairs, we're talking about currency pairs, we're also talking about pairs of instruments. And I'll be showing you things like comparing one index to another to be able to look for anomalies. Okay, correlation and co-integration were actually invented in the 80s by a couple of Morgan Stanley analysts. So it's actually a fiercely complex and mathematical process. I'm not going to bore you by going through all the math because, to be honest, it really only works when you're trading equities, and it takes a lot of brain power and computing power for the big banks to follow this. It may or may not work for them. It's really, to be honest, the way this was designed is actually above most retail traders. And to be honest, you wouldn't want to get involved. It just takes too much practice and too much time analyzing. But what I'm going to do is to show you how we can take these principles and use it in our day-to-day retail FX trading, whether it's with commodities, whether it's currency pairs, or whether it's indices. So we can actually use this magical correlation and co-integration that was developed by a big bank in the 80s in our day-to-day trading of FX and CFDs. Okay, and I'm going to finish with my order of analysis, which I do almost every webinar. The order of analysis is what I personally look at before I pull the trigger and make a trade. A lot of people ignore fundamentals and they go straight to technicals. A lot of people ignore everything and go straight to candle patterns. A lot of fundamental traders ignore the technicals and just follow the news. There are a lot of ways to trade. I like to use all of them. But I do it in a certain order. So at the very end of the webinar, I'm going to go through again my order of analysis, which I think for me is gospel. I've had students who actually make it into a poster and stick it on their wall. So you'll see that when we get to the end of the webinar. Okay, let's move on with thinking in pairs. So the way we trade, we only trade really in pairs. And if you're a beginning trader, you really need to start thinking this way. In our day-to-day lives, if you live in one country and work with one currency, you really don't get to think in pairs. So here's an example. Someone goes to the Gap and buys a t-shirt and they buy it in American dollars. If they're in Boston, for example, they don't realize they're actually trading a pair. I mean, if the American dollar goes up, the value of that shirt may go down. If the value of the American dollar goes down, the value of that shirt goes up. And that's called currency inflation. But you don't necessarily want to be thinking in pairs because you're just going out to buy a t-shirt. It really doesn't matter. In your day-to-day lives, whatever you're doing, going out to buy a t-shirt or a tube of toothpaste, if you start thinking in pairs, you'll find that you'll be understanding trading a bit more. So if we went to buy a car, for example, in Australia, we've got the car versus the Australian dollar. And that's a pair. If it's a used car, that value is probably not going to change very much except by supply and demand. It's not going to be affected by the currency. If it's an imported car, yes, it will. The Australian dollar will fluctuate, and that imported car from Germany or wherever it's from will go up or down in value depending on the value of the Australian dollar versus the manufacturer of that product, of that car. So again, we need to think in pairs in terms of when we're buying things. Vodka in Russia is paid for in rubles. Sushi in Japan is paid for in yen. Again, these two products are made domestically and they wouldn't be affected by currency fluctuations. But again, the people who go to the shop to buy these won't necessarily be thinking in pairs. And it's important to do that. So if we go buy a tube of toothpaste, you've got toothpaste versus your currency. If you're in London, then you're paying with the pound. If you're in Zurich, you're paying with Swiss franc. If you're in Dusseldorf, you're paying with euros. And you don't necessarily think. If it were the other way around, euro toothpaste, you would never keep track of the price. So we always have the currency at the end and as the quote. So every transaction we make is a pair. we look at gold, for example, a lot of people say, hey, I want to trade gold. What's really important to understand with gold is it's paired against something. In this case, it's paired against the US dollar. On Valutrades, you can trade it against the Australian dollar, you can trade it against the euro, but for the most part, gold is traded versus the American dollar. So it's not enough to say, oh, the price of gold is going up and down. If the value of the American dollar changes, then that relative price of gold is going to be changing as well. Okay, oil is the same. We trade oil or buy oil per barrel against the US dollar. If we're trading stocks like Apple, we'll generally do that in American dollars. And of course, we have our currency pairs. We have euro versus the dollar, pound versus the dollar, dollar versus the Canadian dollar, dollar versus the yen, pound versus the yen, etc. Okay. And very quickly, I know I've done this already, but I'll go through it very, very quickly. The Forex majors, these are the pairs that most people trade for many reasons. One, the liquidity on these is quite good, so you get good execution. And also the spreads are very low because of the size of the market. So the euro dollar is the most commonly traded currency that we have. The European euro versus the American dollar, of course. Spreads on Valutrades are typically about zero, so there almost is no spread. Other important pairs are the dollar versus the yen, pound versus the dollar, et cetera, et cetera. These are all, these majors are all pegged to the US, not pegged, sorry, are all paired to the US dollar. And that's, the US dollar is the hub of all Forex, and this is really important to understand. So anything else that's not an American dollar pair, we call it a cross. So you can see on this chart here, we've got euro versus Swiss, and that's a cross. If it's a pair with the American dollar, we don't use the term cross. It's called a Forex major. Everything else is a cross. And the reason is because if you're exchanging, believe it or not, exchanging euros into Swiss francs, at some point it actually becomes a dollar. So that's why the spreads are never that good when you go, if you're a tourist and you're changing pounds into euros, et cetera, generally somewhere there's a switch between the pound to the dollar and then back to the euro. I know it doesn't seem fair, but that's the way the industry works. And as traders, we don't really see this, but the spreads reflect that difference. Okay, we have Japanese yen crosses, pound crosses, and we have other crosses like the Aussie versus the Swiss. And the more less traveled, the route less traveled, and the more exotic the pair is, you'll find the spreads get wider and wider. If you like to trade, for example, the South African rand versus the Brazilian real, you might have an interesting fundamental reason to trade that, but you'll find the spreads will be vast. And it's not because of the value trades, it's not because of the broker, it's just because that market is very difficult to find liquidity. So if I go back quickly, you find a lot of traders, especially scalpers, will be trading the Forex majors. And again, I need you to think in pairs. Okay, and again, I'm going to talk about gold and specifically gold, XAU, USD. It's important to understand that you've got gold versus US dollar, not just gold floating all by itself. Gold, of course, is affected by geopolitical events like wars, or if there's a run on equities, then people will typically go to gold, but it's also affected by the strength of the US dollar, and I'll show you that in a chart in a little while. When you're not thinking in pairs, you're probably trading equities. So the UK 100 is the FTSE 100 is basically an index, but it's actually comparing a basket of 100 UK companies with their market capital and their share price. So in this case, we're not thinking in pairs. We're simply thinking of a relative value of these UK companies. Okay. One thing I want to do now, as I said, as I promised, I'm going to go through a strong week analysis. But what I do when I'm trading or at my analysis, I always look at all the currencies, all the pairs in any major currency. If you watch my Market Blast videos, you know I'm always working in MT4 profiles. And if you want to, we have a video on how to make profiles. I won't go through it right now, but if you see at the bottom of the screen, it says AUD. That's my Australian dollar profile. And this profile, in this case, it's all 4-hour charts. I've got in the top left Aussie versus US dollar. In the middle, Aussie versus the yen. Then we got Aussie versus Kiwi. Down bottom left, Aussie versus the euro, etc. So I'm looking on these charts at all the different Aussie pairs. And it's important to know, because if you want to trade any instrument, it's not very difficult to do some research to see, hey, wait a minute, which way are all the other Aussie pairs going, and which way are all the other Swiss franc pairs going, to see which way I should be trading. Because there's nothing like making a trade and then realizing that you're actually trading against not necessarily the trend of the pair you're trading, but the actual direction of the currency overall. And a lot of things will affect these currencies. And again, if you follow my Market Blast videos, you will know right now, for example, the Australian dollar and the New Zealand dollar are strong because they have a serious inflation problem, and it's likely that the central banks will raise interest rates. So this, again, is fundamental analysis, really important to understand, at least follow what's going on. Maybe watch Bloomberg or just go into Yahoo Finance. And as you'll find in my very last slide of my order of analysis, I never do anything without understanding the fundamentals. So I can tell you right now, hand on heart, that the New Zealand dollar is quite strong because the central bank, the Reserve Bank of New Zealand, are probably going to raise interest rates because it's one country right now that are having difficulty with their inflation. And as we've seen over the last several months and even a couple of years, thanks to pandemics and wars in the Ukraine, et cetera, inflation is becoming a problem, and it's becoming a different problem in every different economy. And the different central banks are having to use different tools to try and fight that, mostly raising interest rates. And if we compare the fundamentals, and again, find correlations and co-integrations in the fundamentals, we can see which way these currencies are going to go, and then boil it down to the individual pairs. So if I look at all my MT4 profiles, I'm going to go through this quite quickly. I've got the New Zealand profile, again, looking at all the different pairs. I've got an American dollar profile, which obviously is the most popular, a pound profile, a yen profile, a Swiss franc profile, and a Canadian dollar profile. Okay, let's take a look. Let's do a live strong week analysis. And as I mentioned earlier, we have a video in the basic trading course on strong week analysis. It's a 3-minute video that shows you how to do it. I'm going to do it live for you right now. And again, I can't stress enough how easy it is to do and how valuable it can be. So if you go on to a YouTube channel and just go to the Valutrades YouTube channel and just search for strong week analysis, you'll see it. And the beauty is this is actually in 5 different languages. It's got English, and it also has Spanish captions, Portuguese captions, Japanese captions, and Chinese captions. So you can see it in different languages. Okay, I'm going to switch screens right now to go to my MT4 chart. Okay, here we have MT4 in a profile, and it's the Australian dollar profile. And sitting on top of it, I have a little tiny spreadsheet. And this spreadsheet basically, and you can see what it is. It says Australian dollar, Canadian dollar, Swiss franc, euro, British pound, Japanese yen, New Zealand dollar, and American dollar. And basically, I'm going to fill in some values for each of these currencies, looking at the pairs. Sometimes it's a bit subjective. I'm going to try to be objective when I'm looking at this. It's up to you as to how you want to determine a strong or weak currency, or in fact, a currency pair. And again, I'm using the 4-hour charts. If you like to trade longer time frames, you may use the daily chart. If you're a scalper, you may want to look at 5-minute or 15-minute charts, etc. But I'm using the 4-hour chart for this exercise. So what I want to do right now is look at the Australian dollar pairs and see where I think it's going. So basically, I'm going to slide this spreadsheet over somewhere across. So look, basically, I'm going to do this very quickly. So I don't want to spend the entire webinar doing this. So if I look at a Aussie dollar, obviously in this case, Aussie is very, very strong. If I look at Aussie yen, I can see, yes, it's definitely strong. Aussie CAD, same thing. Okay, if I look at pound Aussie again, because Aussie is the the quote currency in this case, when the chart goes down, that means the Australian dollar is getting stronger. So I don't need to do lines on every single chart. I can see 1, 2, 3, 4, 5, 6. I've got 7 charts, 7 pairs that all show me the Australian dollar is strong. So I'm going to put 7 for strong, 0 for weak. And I should have done the math on this one. I deleted anyway, so I'll just give that a 7. Okay, so you can see where we're going with this. So now I'm going to go to my next profile, and you can see what I've got here. My profiles consist of things like Australian dollar, Canadian dollar. I've got an energy profile. I've got a profile for metals. I've got US indices. But right now we're just looking at currencies. So I'm going to go through this quite quickly in alphabetical order. Here we have the Canadian dollar. Okay, my spreadsheet is handy. So if I look at dollar CAD, I could say that it's consolidating, and in fact, we could give it a strong because it has dropped in the last 2 weeks. But to be honest, I'm going to be mean. I'm going to give it a consolidate. I'm going to say it's neutral because for the last week, more than a week, it really hasn't gone too far. In fact, if we look at this, we're actually sitting on a nice level of support. So if I go to EuroCAD, I can see quite clearly that the Canadian dollar is weaker because the excuse me, the euro is stronger. If I go to Aussie CAD, again, Aussie stronger, Canadian dollar is weaker. Kiwi CAD, quite obvious, Canadian dollar is weaker. If I look at CAD Yen, it's pretty much neutral. If I look at CAD Swiss, it's neutral. If I look at Pound CAD, okay, so I've got some neutral and some weak and basically none strong. Let's take a quick look again to see if we got that correct. Yeah, I would say that none of these are strong. I mean, you could even be a bit subjective and say that the Canadian dollar is stronger than the Swiss franc, but over the last 2 weeks, it's been ranging. So let's just give it, what did we say? We've got 4. Let's say we give it 4 week. So then our score would be, in this case, -4. Okay, again, we'll quickly go on. The Swiss franc. Okay, in this case, we've got CAD versus franc. We said earlier that that was consolidating. Aussie versus Swiss franc. Clearly, Aussie's winning, as we saw Aussie's winning against everything. So that's 1 against the Swiss franc. We've got Euro Swiss. We actually have a couple of overall Euro stronger, and even the short term, the Euro stronger. So that's definitely a weak one for the Swiss franc. The Kiwi is winning out here as well. So we've got another week. And the pound is actually stronger than the Swiss franc. American dollar versus Swiss franc, I would say it's consolidating, and I would also say ranging again for the Swiss franc versus the Japanese yen. So looks like we're tied for the Canadian dollar right now. So it's going to be a bit tricky. So we've got 1, 2, 3, 4, and let's make sure we're going in the right direction. Yes, the Swiss franc in every case is the quote currency. So we're going to go Swiss franc 4 week. So it's -4. Okay, I'll try and go through this very quickly because I know. Okay, here we are with the euro again. This one's painfully obvious. The euro is stronger than the American dollar, but it's weak against the Australian dollar. And in every case in this chart, the euro is the base currency, not the quote currency. Okay, we're going to say that it's consolidating against the Japanese yen, or should we? In the short term, actually, I'm going to change my mind. I'm going to say that the euro is actually getting stronger against the Japanese yen. It's happened twice now. The euro versus the Swiss franc, I will say the same thing. Euro versus Kiwi, definitely consolidating. That's a ranging market. Euro versus pound, that's a tricky one, but it looks like it's heading back down to support. So I'm going to say that the euro is weaker in this case. And if I go against the Canadian dollar, then that is definitely stronger. So what do we have here? We have 1, 2, 3, 4 that are stronger. And we have 2 that are weaker. So in that case, the score for the euro by itself, not the pair, the euro currency by itself would be 2. 4 minus 2 is 2. We need to get rid of this grammar thing. Okay, let's quickly do the pound. Okay, again, very quickly, clearly the pound is winning out against the American dollar, against the euro. It's a bit tricky, but let's give it a strong pound versus CAD, pound versus yen, pound versus Swiss franc. And you can see these are quite easy to draw. Okay, we've got pound versus Aussie. And as we saw earlier, the Aussie's winning out against pretty much everything. So what do we have? And we're going to say pound versus Kiwi is neutral because it's definitely a ranging market. So what do we have here? We have pound winning, pound strong against 1, 2, 3, 4, 5. So we've got 5 strong for the pound, and we've got 1 weak, I believe. Yes. So that gives us a score of 4. Okay, again, very quickly, let's move on. Japanese yen. Looks like it's consolidating everywhere, but it seems to be having a temporary weakness. Again, this is very subjective. Where do you draw the line? You draw the line from 2 weeks ago, or even 3 weeks ago, or do you draw the line from 1 week? With a currency, with a set of candles like this, it's not always that straightforward. But it looks to me like the bull run of the Japanese yen has come back. So these are all looking quite strong in the short term. Again, when you're trading, you need to be very aware of things like resistance. So you wouldn't be rushing into trade to go long on pound yen because you're getting close to a line of resistance. You may look at something like pound Swiss, Swiss yen. But again, you've got different levels of resistance here, for example. I know I'm getting sidetracked, but you know me, I'm a chart junkie. Right, let's get back to the business, and we're looking at the strength of the yen. So don't forget, in every case, the yen is the quote currency. So it's basically weaker against everything. So we've got 7 weak. So it gives us a score of -7. So pretty straightforward. I think we know where we're going with this when we finish our analysis. Okay, let's do quickly Kiwi. So yes, we definitely have strength against the American dollar. We've got strength against the Swiss franc, neutral against the pound, actually weak against the Aussie, neutral against the euro. Looks like Kiwi is stronger against the Canadian dollar and stronger against the yen. So we need to be, again, aware of where the New Zealand dollar is based in these pairs. And in every case, except one, it's the base currency. So what we have is 4 strong and 1 weak, because that's against the Australian dollar. And that gives us a score of 3. Okay, bear with me, 1 more to go. American dollar. Okay. Weak against the euro. Weak against the pound. Weak against the New Zealand dollar. I'm going to say neutral, ranging with the Swiss franc. And I think we said with the Canadian dollar, we're going to be neutral as well. So I'll leave this one alone, leave these 2 alone. Clearly, the American dollar is losing out to the Australian dollar. Again, we talked about why for fundamental reasons. But in the short term, the American dollar is strong against the yen. Again, I'm being subjective. You could, if you want, drag your line back to 2 weeks or 3 weeks and say, hey, it's actually weaker against the yen. But there seems to be something strong going on in the last 2 weeks that we don't want to ignore. So let's take a look and see where we are. So we have 1 week, 2 week, 3 week. We have 4 week again on the American dollar. And we have 1 strong. So we have a score of 3. So what do we do with this now? So what we do with any spreadsheet, we can select the score. We can go right click and sort rows by ascending. Let's try sort rows by descending. So here we have our score. So we have the Australian dollar as the strongest currency with a 7. We have the Japanese yen as the weakest currency with a -7. And we have the Swiss franc fairly weak and the pound fairly strong. So it's painfully obvious right now that the Australian dollar is the strongest currency. We probably didn't need to go through this whole exercise to see that because we could tell by looking at the charts. And we know from the fundamental analysis that the Australian Reserve Bank of Australia will be raising interest rates soon. So the Australian dollar is getting stronger. So what do we do with this? Well, right now we want to take a look at the Australian dollar versus the Japanese yen. So let's do that. Let's go to our Australian dollar. Okay, and we go to our yen. And we can see we have quite a sharp climb upward. So do you want to go long on this? You may want to go long on that. And the reason is you've got a ways to go to get to the next level of resistance. Or in fact, we're even past this level of old support into resistance. So this is a very valuable thing to do, the strong weak analysis. Okay, I'll be doing more and more of these on my Market Blast videos. So the spreadsheet was very easy to use. We can even compare, if you don't like that trade, you can take a look at pound versus Swiss franc or pound versus yen, because it's all a strong currency. But right now, again, I'm going to repeat that the Australian dollar is definitely the strongest currency. So any trade you make, we like to trade with the trend. So we want to look for pullbacks on the Australian dollar. Right now, we don't see any, but that doesn't mean that they won't happen. We have, in fact, right now, I tell a lie, we have one against the Canadian dollar. So if I just zoom out a bit, we could actually consider a trade on this pullback if price action reaches this lower trend line and the stochastic oscillator decides to go around. So we've actually gleaned quite a bit of information off the strong weak analysis. Okay, let me go back to our slideshow. Excuse me. Okay, let's look at correlation. So again, this whole system was developed for trading equities and using very complicated math. That doesn't mean we need to do that. There are a lot of correlations that we know, that we recognize in the FX markets. Things have changed a little bit with the economy. For example, there was a very strong correlation for a long time between WTI and the NASDAQ. It was incredibly easy to follow. These days, though, it's becoming difficult because the oil, we've had problems with our crude market thanks to problems in, obviously, a war in Ukraine and supply and demand after the pandemic. That really doesn't exist anymore, but we expect that to come back. But if you can take a look at things like the Australian dollar and gold, this is a correlation that's existed for a very long time, and not a lot of traders know or understand this. So if you take a look at these 2 4-hour charts, again, take a look at any chart. It could be a daily chart, could be a weekly chart, could be 1-hour chart. Compare these two. But what's really fascinating, and again, I said just a few minutes ago, we want to trade with the trend. So we've got an uptrend in gold and an uptrend on the Aussie dollar. We want to go with the trend no matter what we do. And it's not a coincidence that both of these, Australian dollar and gold, in this case, are paired with the American dollar. So if the American dollar goes up or down, these two pairs will move as well. So this is a brilliant correlation. But what's really fascinating about this, I don't know if you can see this, there's some lines I've drawn on the MT4 chart where I've actually pegged vertical lines where you've got big movements. What's really interesting is that the Australian dollar, these green candles you can see, the Australian dollar versus, the Aussie dollar, AUD, USD, moved 1 hour quicker than gold did, and it did it more than once. So I would make this your homework for the next little while. Take a look at correlations between Aussie dollar and gold dollar, and see if you can spot big movements in either of these. And again, I could draw more lines, and I'm finding more and more opportunities where the Australian dollar, Aussie US dollar pairs moved about an hour ahead of gold. I'm not saying hand on heart that's going to continue for the rest of our lives, but it's definitely worth an opportunity. You can also do the same thing with the red candles. We had the exact same effect. Unfortunately, I wouldn't make those trades because it's going against the trend. And you can see the green candles are actually bigger because of those movements, and they're also a lot safer because you're going with the trend. So here's your homework. Take a look for the next little while at Aussie dollar versus gold dollar, and you may find some interesting movements with the Australian dollar and gold. And again, I'm going to repeat, I learned years and years ago that the Australian dollar is directly correlated to the price of gold, and not a lot of traders pay attention to that. So here's something you should be trying out. I'm going to be trying it out, I can guarantee it. Okay, another correlation you can watch are indices. You may want to watch the DAX versus the CAC 40, or the IBEX versus the DAX or whatever. But here's a good one that is finally back in line. It was actually out of whack for a number of years thanks to various policies in Asia. And this is the China A50 versus the Hong Kong 50. And you can see how easily it correlates. So what we want to do is look for movements in either of these that are completely opposite of its correspondent. For example, if the China A50 suddenly gets very bullish and the Hong Kong, the Hang Seng doesn't, you may find that it will catch up. And in fact, if you do a little analysis, you will find that in almost every case, it does catch up. So keep an eye on these. And again, these are the daily charts. So you may want to look at shorter term time frames. But this is a painfully obvious correlation, and there are a lot of them that go on day to day in the Forex markets. So take a look at commodities. We used to look at the difference between gold and silver. That seems to have disappeared for a while, but it may come back. So if anything happens like that, I'll be announcing it on the Market Blast videos. Okay, here we have an inverse correlation, and one of the most famous inverse correlations in our business is the Canadian dollar versus oil. And basically the reason is the Canadian dollar is one of the COM dolls, and the COM, basically it's a dollar based on commodities. Other COM dolls are the New Zealand dollar and the Australian dollar. The commodity that the New Zealand dollar likes is dairy products. In fact, one thing I tell people, if you like to trade news, trading against the New Zealand dairy product report is actually good fun because it's almost always wrong, and there's always a lot of movement. So we'll have at some point we'll have some news trading webinars on that. Trading oil is good fun as well because there's a lot of fundamental things that go on with rig counts, inventories, and obviously geopolitical events. But one of the biggest correlations that we can see is the Canadian dollar. And again, the Canadian dollar is always affected by the price of oil. And you may want to look at different pairs. It doesn't have to be dollar CAD. Again, as I've been pointing out over and over again about the topic of this video is the correlations and co-integrations. It doesn't necessarily have to be dollar CAD. It could be CAD Swiss. It could be CAD Yen. It could be Aussie CAD. But you'll find these inverse correlations with oil very, very common. What moves first? Typically, you need to be taking a look. And in fact, I've drawn a red line on this big spike. There's actually a bit of a whipsaw. And what was fascinating was that the price of oil went about an hour ahead. It actually whipsawed. You can see that you may not be able to see it on the chart, but there's a green wick at the bottom of the chart where the price of oil dropped dramatically, which shot up dollar CAD. So the Canadian dollar got weaker based on the price of oil getting weaker. And the beauty of this is that happened to dollar CAD about 1 hour after it happened to oil. So if you're paying attention, you might be able to catch these moves. They're not always guaranteed, but in this case, it was quite a good one. If you catch these things a bit late, there's nothing wrong with that because you can catch it on the downside. In fact, that's very often how I trade long term. I may see a big movement, like right now we're watching the Australian dollar get higher and higher and higher. Well, at some point, it's going to reverse. And when it does reverse, and the Reserve Bank of New Zealand, the Reserve Bank of Australia decide that maybe they want to pivot, the Australian dollar will get weaker for months and months. So you don't necessarily need to feel bad if you've missed an opportunity like this one here with the lovely wicks on oil and the Canadian dollar. Here's a case where you could have said, in fact, it happened to me very often where prices have shot up, but I've managed to get back in on the way down, again, trading with the trend. Okay, so here's an inverse correlation versus a correlation. Okay, right, co-integration. Here is where we can actually run pairs parallel. And I could spend days and days looking at this. And again, there are a lot of ways to look at co-integration, especially with things like the American indices or the European indices. And basically, you will find, in fact, let's quickly switch back over to MT4. Let's get rid of our spreadsheet. We know all about that now. I'm going to go to a profile called US indices. And I'm going to go to, okay, here I have all the American indices that Valutrades has. And basically we have the NASDAQ, the S&P 500, the Dow Jones Industrial Average, and the Russell 2000. So basically what I look for are movements in one, or maybe movements in three of them, and a lack of movement in the fourth. And I really keep an eye on why. I want to do a bit of research as to why some moved and the other ones didn't. It could be that, for example, let's say the NASDAQ moved and the Russell didn't. It could be a problem with, or a problem or a success for tech companies, because the Russell 2000 are basically smaller companies. It could be that the Dow Jones shot up, but the NASDAQ didn't. And the reason for that is that the NASDAQ has no banks on it. It has no financial instruments at all. It only has tech and pharma and things like that. So you need to be careful of those. But if you find a big movement on one of these indices, or three of these indices, and the fourth one hasn't moved, you may have a really good opportunity. So this is where we can use co-integration to our advantage without being a genius in mathematics or having the firepower that Morgan Stanley does. And again, you can do this with a lot of different instruments like commodities. Looking at the European indices and so forth, and as I showed you earlier, the Asian indices. So let's quickly go back to, oh, one more thing I wanted to show you. Let me quickly change profiles. And there is a co-integration that I discovered years ago, and it's actually very difficult to follow, but when you do get it, it's actually phenomenal. And that's for scalpers. If you're a scalper, and Valutrades encourages scalpers, don't worry about that. Scalping is basically a style of trading that gets you in and out of trades very, very quickly with a sort of a medium risk. You need to know what you're doing. But one thing I've found, in fact, here, what I've done right now, I've got an American dollar profile. So these are all US dollar pairs on the 1 minute chart. And I have found this, they're not always easy to spot, and you need to be quite diligent. And I've found that, for example, if there's a big movement on all the US dollar pairs, and you see on the 1 minute chart that the price will shoot up or shoot down quite rapidly. And maybe there may not be, let's say, for example, they all shoot up except for dollar yen. And there may be no reason for it, but I found that typically price will catch up. So if, for example, all of there's a sudden strength of the American dollar on the 1 minute chart, euro dollar falls, dollar yen goes up, et cetera, et cetera, et cetera. And then suddenly you find that dollar Swiss hasn't moved. chances are it's going to move, and you need to be aware of that. So always trade with the trend. Again, I'm going to repeat, this is not a co-integration that is easy to spot. You need to be watching charts almost all the time. You can do it during news events, but unfortunately the spreads may be unfavorable to you. But if you're trading American dollar pairs, you may have good spreads anyway. So again, it's something that you can follow with co-integration. Not always easy to spot. You need to spend a lot of time watching your charts if you're a scalper, but that is one way to get to take advantage of co-integration. Okay, or if you want to take the easy way out, you can use Valutrades signals. We always talk about this. If you go onto the website, you can go to resources, and under tools, you can find free trading signals. And these signals are delivered right to you. Just sign up for them. It's quite easy. You can get them on the Telegram group, or you can get them to your email. And we've got a couple of videos that show you exactly, and some webinars, of course, that show you exactly how signals work, and they're quite neat. They're created by a regulated company with several people who have diplomas in their from the Society of Technical Analysts, so they really know what they're doing. Okay, here's an example of an easy-to-read trading tip. Here we say they're bullish on the NASDAQ. They want to buy at this level, 1535. And they go through a detail explaining why they want to. They give you a stop loss target, and they give you 2 profit targets. So, and they also say preferred trade is to buy on dips. And you'll hear me on my Market Blast videos talking about buying the dip all the time. Well, here they have an exact signal looking at just that. And they will also give you a chart. They'll show you exactly in green and red where the entry point is, where the stop loss should be, and where your take profit. And they show you graphically in green and red your risk reward ratio. In this case, it's about 2.5 to 1. So they will always give you a signal with your target and your profit and your risk based on a positive risk to reward ratio. Okay, we also have now a pairs page that was just recently announced. I'll be talking more about that on the Market Blast videos. Certain pairs will have a lot more detail. Okay, let me quickly change over to the Valutrades website. So if you go to the menu, go to products, okay, if I scroll down, these products, here we have Forex, here we have CFDs, here we have commodities. The products page on Valutrades is quite valuable. But if we, let's say, for example, we go back to our Forex and we click on the underlying symbol, which is euro dollar, we can now see we have a euro dollar price page. We have sentiment, which is based on market analytics, news analytics. We have a euro dollar signal, which is the same signal that we saw earlier. We click on the information button, we get a full breakdown of this live signal. So in this case, they're saying it's bullish. They're looking to buy at a certain level. In this case, you can see they've already entered the trade, and it worked out quite well. They're well into profit. The profit targets are listed here, 2 profit targets and a stop loss. So again, as a trader, you may decide to follow the signal when you had the chance and get out of the trade when it's in profit, or let it run to the top of the signal, take profit. So that's available for everybody on the Valutrades website. So let's quickly look at another one. Let's go back. And we'll quickly look at gold, for example. We've got gold, silver, we've got American oil, we've got UK oil. Here we have gold. And again, the sentiment is, in this case, is a bit bearish. But we've got a signal as a buy limit. And a buy limit means that they want to see price go back down, hit this level, and go back up again. So they're looking to buy at 1909, which is very quite low compared to where the price is now. But if you look at this chart, you can see that there's a level of support there where they want to buy. And there's a good reason for that. So you can follow this you can set up your trade. You can set up a buy limit on your Valutrades MT4 platform to take advantage of this, or you can simply maybe set a price alert to alert you of that price level. So there's a lot of information here on this particular chart, and there's also related news on each individual one. Okay, as promised, I'm going to be looking at my order of analysis. Hopefully I've given you some idea of how to look at currency pairs and how to do pairs against pairs. Again, we talked about co-integration, correlation of different pairs of different instruments. We'll call them instruments. Again, you can look at currency pairs versus currency pairs. I really encourage you to get involved in doing a strong week analysis. There's a video on YouTube, or you can watch the recording of this webinar, and I'll show you again how to do it. And it doesn't take that long. You can do one every week. If you're really diligent trading short-term time frames, you can use a shorter time frame and do once every day. But again, it can be very valuable. You can see a pair that are strong versus weak that you didn't even think about. Australian dollar versus Swiss franc, for example. You wouldn't normally go there, but once you do your strong week analysis, you can see that, hey, how did I miss that? This is an easy trade. So I'm going to be finishing up by talking about my order of analysis. As I said earlier, I don't do anything without understanding the fundamentals. Again, if I'm looking at trading the Australian dollar right now, I know that inflation is bad. The Reserve Bank of Australia are really seriously looking at raising interest rates. On the other side, we saw that the Japanese yen, let me drag my, you can see my little spreadsheet here that the Japanese yen was the weakest currency. I also know they've got fundamental issues. The governor of the Bank of Japan is due to retire in the next couple of months. Believe it or not, that's going to change a lot. So they're looking at changing their policy. The Japanese yen really keeps going up and down. So it's very important to keep an eye on not just dollar yen, but all the yen pairs, and see that it's a stronger or weak currency. That's very fundamental. It's very important. So once I know my fundamentals, then I look for support and resistance. Again, I pointed out a few things when I was looking at the MT4 charts. I would never buy too close. Sorry, I would never buy too close to a line of resistance and never sell too close to a line of support, because those lines are there for a reason. Those lines are there because the market has decided that's as far as they want to go. And if you go in the wrong direction, too close to a line, you could find price action reversing very quickly. So you need to be plotting support and resistance all the time. Then I look at chart patterns. If you watch my Market Blast videos, you know I'm a chart pattern junkie. I look at pennants, I look at rising wedges, I look at triangles, descending and ascending. And I also follow up with indicators. Indicators, to me, the stochastic oscillator is very important. Some of you like MACDs or RSI, absolutely fine. Whatever works for you, make sure you back test. But I would never make a trade based on an indicator. Some people like to trade simply moving average crosses. If I'm doing that, I want to combine it with something else. But again, I go back to my support and resistance and my fundamentals and candle patterns. It's always nice to see a candle pattern confirming what I think is going to happen with a trade, but I don't base my strategy on the candle patterns. Some traders do, and then more power to them, absolutely no problem. Again, I'm going to repeat, I look at the fundamentals. I want to see my support and resistance. I then look at chart patterns, then my indicators, and maybe candle patterns. So if I've got all 5 going in the same direction, I'm happy to pull the trigger. So anyway, looking forward to seeing you on the Market Blast videos, and next quarter, our next webinar. Keep those comments coming. Get your friends to subscribe to our YouTube channel. We're very pleased with the progress of that. And thanks for watching, and we'll see you soon. Take care, and happy trading with Valutrades.